Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday, 17th of July, recording the video 8:35 p.m. Eastern Standard Time. I was expecting downwards movement. Well, I was expecting sideways movement before a downward wave. I was expecting that this fourth wave correction was incomplete. Price did move lower, and I think now that it could actually be a nice complete triangle. My main wave count now expects upwards movement from here to the target at 2010. If it's met in another 23 trading days, then the durations will exhibit Fibonacci ratios between each other and will exhibit Fibonacci numbers in the numbers of days the waves have taken to unfold. Let's have a look at the charts. The main wave count is still pretty bullish. It expects that the bull market, which began at the end of the credit crunch at 666.79, is incomplete as a cycle degree fifth wave. Within cycle wave 5, primary waves 1 and 2 are complete, and within primary wave 3, intermediate wave 1 is an incomplete impulse. Within intermediate wave 1 impulse, minor wave 1 is very short. Minor wave 3 was 2.618 the length of minor wave 1, and at 2218, minor wave 5 will also be a long extension and would reach equality in length with minor wave 3. Within minor wave 5, we've passed the middle of it here. The structure is incomplete. We still need another couple of fourth wave corrections and 3 more fifth waves to complete the wave count. Within the middle of it, we have 1, 2, and at 2010, minuet wave 3 will reach 1.618 the length of minuet wave 1. Within minuet wave 3, there's already a ratio between sub-minuet waves 3 and 1, so I'm not going to add to the target calculation at this stage at a second wave degree, because I'm not expecting to see a Fibonacci ratio for sub-minuet wave 5 to either 3 or 1. Normally, for the S&P within its impulses, only 2 of the 3 actionary waves exhibit a Fibonacci ratio to each other. I'll expect the fifth wave to be likely to end about the upper edge of this channel. I've drawn it using Elliott's first technique from 1 to 3 with a copy on 2. We have a really typical overshoot for the middle of the third wave, and the fourth wave may have ended contained within that channel. At this stage, there's no upward movement to confirm that the fourth wave is over, so I have to leave the invalidation point down here at the daily chart level. But if we see price move above 1983.94 in the next couple of days, I'll have confirmation that this fourth wave is over, and I'll move the invalidation point up to the start of the fifth wave. For now, if the fourth wave continues, it can't move into first wave price territory below 1884.89. On the way up, as intermediate wave 1 comes to an end, I'd expect to see a continuation of divergence between MACD and price at the daily and the weekly chart level. In terms of duration, when I expect this target to be reached, I'm looking at the lengths of minuet waves 1 and 2 and 3 in terms of the number of days they've taken. Minuet wave 1 lasted 12 days, just 1 day short of a Fibonacci 13. Minuet wave 2 lasted a Fibonacci 34 days exactly. So far, minuet wave 3 has lasted 66 days. The next Fibonacci number in the sequence is 89. So if it continues for another 23 days, it could end in a Fibonacci 89 days, which would mean that 3 and 2 and 1 all exhibit Fibonacci durations and the number of days they've taken, which also means that they have Fibonacci ratios to each other. Let's have a look at how this fourth wave may have ended on the hourly chart, where it begins here. This point here, it could have been a running contracting triangle. The BD trend line has a slope, and it's too much of a slope to say that this could be a barrier triangle. So we could have a zigzag for A, a zigzag for B, which moves beyond the start of A, so the triangle is a running triangle, a zigzag for C, a double zigzag for D, and a single zigzag for E may have overshot the AC trend line, and probably it may have done that so that it brings the price back comfortably into sub-minuet wave 3 price territory, because at its end, sub-minuet wave 4 must affect a net retracement of part of sub-minuet wave 3. So this overshoot ensures that that happens. On the 5-minute chart, I don't actually think that this final fifth wave is actually complete. We may see just a tiny bit more downward movement at the start of tomorrow's session to complete the final fifth wave in there. After that, tomorrow, this main wave count expects upwards movement. I would have a lot of confidence in the target at 2010 when and if we see price move above 1983.94. For this triangle idea, microwave E may not move beyond the end of microwave C, not even the tiniest fraction, below 1952.86. If tomorrow or the day after we see price move below that point, then this is the alternate that I'd use. Too many times for the S&P over the years I have labelled structures as complete or almost complete triangles only to have them invalidate. I'm very wary of triangles on the S&P. They just actually don't always look that good and don't always unfold as you think they should. So I'm considering all possibilities. What if the triangle is not subminute wave 4 in its entirety? What if the triangle is only microwave B of subminute wave 4, and subminute wave 4 is unfolding as a flat correction, subdividing 3, 3, and then would need a 5 down. This is still entirely possible. For this idea, this B wave triangle needs upward zigzag for this final E wave, and submicrowave E may not move beyond the end of C, not even the tiniest fraction. Any movement above 1983.94 would invalidate this idea and give me a lot of confidence in the main wave count. That's why movement above that price point would give me confidence that price should keep going up to a target at 2010. This is the bearish wave count. The subdivisions are the same, the end target is the same, and I'm looking out for a possible trend change in October. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.